A very good morning, guys. Yesterday, the sharpest desks in the market stopped hedging both ways and picked a side. For two sessions, there had been long calls and long puts at the same time, a bet on a move with no direction. Yesterday, they tore it up. They added roughly 90,000 calls in a single day, and they flipped from long puts to short puts. That is not a bet on a move anymore. That is a bet up. The day before the Fed, and overnight the Fed held a fifth straight pause, no shock. So this morning that long is still live, and today on Sensex Expiry it settles. This is the Tanmay Edge. You are listening to episode 92. I am Tanmay Kurtogoti. This is a pre-market podcast. Let's go. So, starting with the border Sensex, yesterday closed at 77,654, up 888 points, up 1.16% in a range of about 430 points. Nifty closed at 24,250, up 1.1%. Bank Nifty up 0.79, and this was broad rally, not a narrow one. One on the wider market, 542 stocks rose against 207 that fell. And yesterday, that number was the other way round. Sector by sector, the tech pack led. Tech was up by 2.47, IT up 2.4, metal up 2.26, telecom 1.7%, FMCG 1.5%, healthcare 1.26. Only auto and realty closed a touch red. And the fear gauge, India VIX fell to 12.01, down 4.4%, a multi week low that we are seeing. The day before the central bank's decision, the market walked into the Fed with a calmness. Now, what happened on yesterday's close, the positioning, and this is the whole episode, guys. Official participant, open interest, net contracts in order that matters. Proprietary desks first, then the FIs, and then the retail clients. So, proprietary desks, index futures, net long 5,236 contracts. They lifted from flat to long. Index calls, net long 1,45,000, and there is a tell. They added about 90,000 of that in one day. Index puts, net short 36,897, flipped from long puts to short puts. So the pro went long calls, sold puts, and added futures. Directionally, they are long three ways. In stock futures, they carry roughly 4,77,000 long futures. So let's move on to FIs. FIs index futures still net short 1,94,818, but lighter. They covered about 10,800 on that day. Index call net short 1,58,213. They covered nearly 89,000 of those short calls. Index puts net long 4,77,176, but they trimmed about 44,000 of the downside. And in stock futures, they are long 6,26,000 futures. That is a long stock. Short index hedge still intact. Every single leg moved the constructive way yesterday. And the crowd, index futures net long 1,35,390. Index calls long only 8,648 because they dumped about 10,000, 1,80,000 calls into the rally and booked profit. Index puts net short 4,86,193, still short volatility and still selling in the insurance. The pros are buying. One picture, pros long FIs covering client short wall. Two of the three desks leaned the same way into a binary event. That was yesterday's Fed event, and it was not just derivatives. In the cash market, foreign funds bought 2,982 crore, their biggest buy in weeks, and took look at the turn. They sold 3,893 crore on 24th, 1,688 on 27th, and then they bought 755 crore on 28th, and yesterday 2,982 crore. Domestic funds added another 998 crore in the cash market. The FI derivative book was green everywhere too. Index futures plus 1711 crore. Index option plus 6,896 crore, stock futures plus 3,263. On the year, foreign funds are now only 8,539 crore net sellers in the cash market against domestic plus of 31,000 crore. The wall of July selling is coming down, and overnight then the Fed on the rates, it was a non-event, held 3.5 to 3.75% band. Fifth straight pause exactly as priced, but Wall Street did not celebrate. The S&P fell 1.5%, the Nasdaq 1.7%, because the story was never the Fed, it was still the chips dragging the US tech lower. For a moment the pros crowded, long book exposed. Then this morning the turn. Asia bounced. Korea, Kospi, the market that broke two circuit breakers this week, is up 4.4%. Taiwan up 1.9%. Japan up 1.7%. The chip fire is cooling. Gift Nifty is roughly flat, trading around 24,228, pointing to a calm open into the expiry. After a softer dollar index at 100.92, Brent back above 90 at 89.4, gold up at 4,083, the US 10-year yield at 4.68, and the backdrop is quietly supportive. Which brings us to volatility, and after an event, this is the most important thing on the board. The fear gauge is 12.01. Our own weekly volatility read is around 11.9, both near multi-week lows. Here is the mechanic, guys. An option carries an event premium going into a known event like the Fed, and the moment that event passes with no shock, the premium collapses, regardless of the direction. It is called an implied volatility crush. So, today, with the Fed behind us, the options bleed towards their intrinsic value, and the sellers of those premium have the wind at their back, not the buyers. That is the difference between yesterday when the crowd owned optionality into the event and today when it decays. Now the Sensex expiry math, guys, because that is what is important today. Spot closed at 77,654. At the money strike is 77,700. The ATM straddle, the combined price of 77,000 call plus 77,000 put is about 435. That 435 is market's own one standard deviation. The move is, it is pricing between now and the close is about 77,220 on the bottom side, and around 78,090 on the upside. That is your inside that box. Inside that box, the interest tells you whether the writers built their walls or resistances. And on the call side, the biggest resistances by far is 78,000 strike, about 18 lakh contracts of call OI over there. And they added over 6 lakh fresh calls yesterday itself. That is the resistance. Above it, it is 78,200. That is the maximum level I'm seeing for today. On the put side, the floor or the support is 77,500 in a single session. Floor is 77,500. About 24 lakh puts have been added here, and the writers have dumped over 22 lakh in the fresh puts in single session. That was yesterday. They are funding that support, daring the market to break below it. Below it, it is the deepest put support on the board, 77,000, about 25 lakh contracts. The overall PCR is 1.47, put heavy, which leans mildly bullish because writers are more comfortable selling downside here than selling upside. Two more numbers that decide the day, guys. Max Pain, the strike where most option buyers lose their premium and the writers profit the most, sits at 77,500, right on that put floor. And the gamma flip line, the line where market makers switch from amplifying move to dampening them, is at 77,700, just above the spot. Below 77,700, dealers are short gamma and the moves get amplified. Remember this, if we are trading below 77,700, you would see that 200 point down move towards that 77,500. Reclaim and hold 77,700, gamma turns positive, moves get dampened, and the market pins. So the plan is simple, guys. So the plan is a pin day. One number, 77,700. Remember this. Hold above it, and the calmer air carries you to 78,000. So above 77,700, 78,000 is the pin level. Below 77,700, the magnet pulls towards that 77,500 level. The max pin and the put floor together, and only if that breaks, you get 77,200. Base case with a flat open and a quiet fed, they want 78,000, and the pin can drift between 77,500 to 77,800. So the fuel for that is our own IT names catching this morning. Asia chip bounce. If IT lifts, the pros get paid and we press towards that 78,000 level. If IT fades, then 77,500 magnet wins. Trade the level, not the move, because 77,500 to 77,800 or 78,000 is your structure for today. One thing worth knowing, guys, and it lands Monday. From 3rd of August, SEBI retires the 30-minute average close for every stock that has the futures and options. The close becomes a single auction price discovered between 315 and 335, matched at one price with the most volume, with a random cutoff so nobody gains the last second. Every expiry you have ever traded settled on that last half an hour average VWAP. From Monday, it is auction. Today is the last big expiry under the old rules. So from next week, watch 315 to 340 window. That becomes the new pin zone. Scorecard on yesterday, I said holding 23,900 to 24,100 range into the Fed. The market broke out instead, closed at 24,250, and the pros were the reason it ran. Roughly a 2.5 out of 5. Full scorecard is available on rupeecase.com. Have a happy expiry, guys. The proprietary desk picked a side. The Fed is behind us. The chip fire is cooling, and today is the bet settlement day. Watch 77,700. Respect 78,000. Keep one eye on IT, and remember the close changes on Monday. This was the Tanmay Edge. If you found value in this, please share it with one trader friend who needs it right now. Subscribe on Apple Podcast, Spotify, and Amazon Music, and listen it live on rupeecase.com where it streams first. And give a rating, guys, and a review if you want to add something to the podcast.